Welcome to Marketopolis, at the crossroads of Wall Street and the internet. In a feed-driven era powered by Reddit, Robinhood, YouTube, X, and many other platforms, retail investors drive the conversation online. Corporate access has been blown wide open, conversations move at the speed of social platforms, and CEOs, IROs, and comms teams are rewriting the investor relations playbook in real time. I'm Matt Joanno, CEO of Stakeholder Labs. Each episode, I talk with public company CEOs and top operators to uncover fresh strategies for communicating and competing in today's markets. Whether you hold a single share or just love the story, you'll take away practical lessons for navigating modern public markets. This is Marketopolis. Let's get into it. Our guest today is Mike Logozzo, the new CEO of reAlpha, ticker AIRE, or AI in real estate. Mike went from EY to 18 years at BMW, where he launched the Innovation Lab, then became employee number one at reAlpha, helping take them public. And before that, spearheaded a Reg A crowdfunding campaign. And now he's steering the company's next chapter. reAlpha started as an asset-heavy AI for short-term rentals play, but when rates spiked and insurance costs surged, they rebuilt as a vertically integrated AI-powered home buying platform that takes buyers from browse to close and has a fresh look at commissions and a focus on real value for customers. In this conversation, we talk about why Mike posts substance over sizzle on X, how a retail investor flywheel could drive both growth and loyalty, and what it takes to execute a major pivot while going public on NASDAQ. Let's get into it. The future of air travel is fast approaching, and to help shape it, Surf Air Mobility is building a platform to bring together AI-enabled software, electrified aircraft, and a nationwide flight network targeting an estimated $100 billion regional air mobility market by 2035. Their SurfOS software, powered by Palantir, is designed to be the intelligent operating system for private aviation and air mobility. And with over $100 million in annual revenue and the owner of one of the largest commuter airlines in the U.S., Surf Air Mobility is uniquely positioned to advance next-generation technology across the industry. To learn more about Surf Air Mobility, visit surfair.com/Marketopolis. Before we begin, please note that this conversation may include forward-looking statements. These statements are subject to risks and uncertainties, which are described in the company's SEC filings and investor relations materials. The views expressed in this discussion are solely those of the guest and do not necessarily represent the views of the host or the show. This discussion is for informational purposes only and should not be taken as investment, legal, or tax advice, nor as a recommendation to buy, sell, or hold any security. You should always consult with a qualified financial advisor or tax professional before making investment decisions. The host and guest disclaim any liability for losses that may result from reliance on this discussion. Remember, all investing involves risk, and past performance is not a guarantee of future results. Hey, Mike, welcome to Marketopolis. Excited to have you on the show. To kick things off, would love to just have you give us an intro to reAlpha and tell us a little bit about the company.
Pleasure to be here. Again, Mike Logozzo. I'm the CEO of reAlpha. Been with the company since its inception. So I'll go back to 2021. I was the original CFO of the company and was the CFO when we took it public in 2023. I transitioned over into the president and COO role in 2024. And then June 3rd, I got appointed to CEO of the company. So just going into almost my fourth month now. reAlpha, just to give you a little bit of background, is it's a home buying platform. So a vertically integrated home buying platform that's powered by AI. So if you think about the home buying journey from browsing a home through closing the transaction, it could be done on our platform.
Seeing your journey from the finance side to the COO role to the CEO role, maybe even going back further, I saw you were in consulting for a number of years. You were in the auto industry. You were in the innovation space. Do you want to tell us a little bit about your journey even before reAlpha and how you got there?
Yeah, absolutely. So right out of college, I did a lot of management consulting, started with EY, and highly recommend that for, young folks coming out of college. You get to, experience different companies from all over the world and, get to see which ones are good and which ones are not so good, see what you like, and not a bad place to start your career. So I did that. When I decided to settle down, I ended up working with BMW Financial Services. So the car company, right? The captive finance for the car company.
Was that a client of EY? How did you get in touch with BMW?
So actually a colleague of mine at EY ended up getting a job there first. He ended up getting promoted and was looking to fill his role that he was leaving, and he reached out to me. So yeah, it's a lot of times it's who you know, a little bit of luck and timing, certainly helps get your foot in the door. But then once you get there, you have to perform, right?
Sure. And were you a car guy personally? Were you into BMWs or any types of cars on your own, or was this just an interesting company to join?
It was an interesting company for me to join. I was a car guy, but I wouldn't necessarily call myself a fanatic. And yeah, but BMW, I mean, it's a world-renowned brand. It's probably one of the top brands in the world if you think about it from a brand value standpoint. And to be associated with a brand like that, I just thought it was a great opportunity. So I came on board. I spent the majority of my career there. I was there for 18 years in a number of different roles. I actually started in IT, ended up on the operations and finance sides of the business. Even worked internationally at headquarters in Munich, Germany for a few years.
How was it working in Munich? Did you enjoy living and working abroad?
I really did. There's a little bit of an adjustment that you have to go through, and I didn't do it alone. So my wife and then I had two young children at the time. So we all had to kind of go through that adjustment period. And but once we did, I mean, we loved it. As a matter of fact, we were hoping that we could extend a little bit longer, but hey, I had to get back to the US and tend to some important matters. So I ended up coming back after my 2 years there.
I love that. So BMW, it looked like you went back to consulting for a little bit and then got to reAlpha. Maybe tell us a little bit about how'd you get approached to join reAlpha in the beginning? What was the selling point? What was your kind of aha moment? This is a big opportunity. I want to be a part of this.
This consulting that I did after BMW is an important bridge to reAlpha. So I'll take a few minutes just to talk about that. One of the things that I did at BMW towards the end of my career there was initiated something called the BMW Collaboration Lab, which is basically it's an innovation lab. So it was the company's first innovation lab. And by doing that, I got to work with startups from like all over the world and look at some really cool, innovative technologies that would help BMW fill strategic areas of need. And I fell in love with it. I mean, to the point where I would say out of my 18 years at BMW, probably was one of the most, I would say, rewarding parts of my career there.
Can you give us an example of what that looked like in practice? Like what types of companies were you working with? How was that getting applied to the different parts of BMW?
So what we decided to do at BMW was I worked with the executive committee there. We identify strategic areas of need. So things that would, maybe keep you up at night or things that, that you had deficiencies that you needed to fill. And we identified what those were. We created use cases around those. And then what we did was we partnered with a consulting firm who specialized in innovation called Elmarks, and they're based in London in the UK. And they helped us scout for startups around the world that had solutions that could help us fulfill those use cases that we developed. So it was really cool because I think the startups that we scouted were from like 81 countries or something like that, which I didn't even think I could name 81 countries prior to that, but it was such a great experience getting to kind of screen them and go through the process. And we ended up selecting 10 that we invited to our headquarters, and we did a Shark Tank Day. So the executive committee were kind of like the sharks, that sat there in the crowd, and they came up and they pitched. We had the company there. We invited members of the community as well to participate. It was like a really, really cool event. We ended up picking 5 to work on those use cases, and then we did a 10-week sprint where the startups kind of worked with a segment of the BMW team, and they kind of co-collaborated, on solutions.
Probably building, but also
Yeah,
like providing that innovation, that energy, and that next gen kind of mentality in a larger organization.
you got it. So at the end of the 10 weeks, the BMW and the startup would co-present basically what they worked on, and the outcome is called Demo Day. And after that, then there were some further discussions on whether this would go into maybe an investment or a partnership or something like that with the startup. So it was kind of a win-win for everybody. But for me, I loved it so much that consulting company, Elmarks, that we hired on, I mentioned to you, they're based in London. Well, they started getting a lot of other U.S. clients that got wind of what we were doing, and they were trying to manage that from the UK. And finally they decided that they had to look for like a managing director to kind of oversee that. I left BMW to be the managing director of L Marks.
Who better to lead that than who had been on the other side of the table?
Well, I mean, that's how I sold it to him. I said, "Hey, look, you could do it better than me." I was a client, and now I'm selling the product. I was a believer, so
Okay.
ended up doing that, and then that's actually how I met Gary Devenor, who is the founder of reAlpha. So, being here in the U.S., one of the things that I was always doing was, making sure that I had a good pulse on like the ecosystem and the new startups that were in town. And I ended up meeting Gary, who was a serial entrepreneur. He exited 3 other companies. He took one to NASDAQ, and he had this idea for reAlpha. And we met for breakfast, and I was literally meeting him as a guy who runs innovation labs. And at the end of breakfast, Gary mentioned to me, he goes, I'm looking for a CFO. And I said, okay, well, I could check my network. What are you looking for? Somebody who has extensive experience, or somebody maybe who could be like an up and comer that, can grow into the role. And he laughed. He goes, no, he goes, would you be interested in being my CFO? And I'm like,
So this wasn't
what?
even on your radar.
No,
And he said,
no,
not
not
for
at
you.
all. Not at all. So I said, Gary, I'm like, I'm flattered. I appreciate it, but certainly not something that I'm was interested in, at that time. We
That seems to
continued.
be a pattern through your career.
Yeah,
You have
yeah,
people that identify the talent in you and they want to bring you over. That's a healthy pattern.
yeah. So Gary and I, we continued to keep in touch. We kept meeting, and he kind of wore me down, and eventually I decided to come on board as the CFO of reAlpha. So and I was technically employee number one at the time. There were the founders and then me.
Wow. Okay. Employee number one. Do you remember what the final pitch or the tipping point was for you to make that jump?
I think, we all saw the opportunity that was out there. And, the TAM in real estate is huge, right? If you think about that and what the opportunity is. So I looked at the opportunity, I looked at the solution, but really most importantly, I looked at Geary. I did my homework on him because, 90 some percent of startups fail. And the fact that, this was a guy who was successful in his past three. He had 3 successful exits. He took one to NASDAQ already, and he's looking to build another public company. And, this is a guy that apparently knows what he's doing. Right. So, I'd rather hitch my wagon, onto somebody who's been through it, than maybe somebody who hasn't. So it was a calculated risk, and, I was really happy I came on board. It's been a hell of a ride.
So out of the gates, there was an idea that you guys would take reAlpha public. And Gary, it sounds like, had a playbook. He had done this before. He had been successful in multiple ventures, but he also knew the path to going public. So maybe let's jump into that phase. So you joined and you guys were not public yet. How many years were you at reAlpha before you guys went public?
2.5.
What was the 2.5 years like before? Was this your first CFO role?
Yeah. It was my first CFO role. As a matter of fact, I even asked him, I'm like, why me? Why did you pick me, or do you want me to be CFO? And he told me he interviewed 120 people for this role. And I was 121. And I don't know. I told him, I said, maybe you just got tired or something like that. And, I was just the next guy that came in front of you. But, I always consider myself more of a COO type of guy. I'm an operator at heart. I've been in financial services though for my whole career, so I understand that part of the business. I had financial roles, so I think he saw that. What he told me was, hey, I'm not hiring you for what I need now. I'm hiring you for what I need 5 years from now.
Wow.
Those were his exact words he told me,
It's a
and
visionary.
he reminds me of that, still today. He's like, this is why you're in the role now.
So you started in the CFO role. Tell us a little bit about those 2.5 years before going public, the company, what you guys were focused on, the growth. That was a very different era from a real estate standpoint and a market standpoint. So maybe take us through that early stage and leading up to going public.
Yeah, it was a wild ride. reAlpha, I'm going to call it reAlpha 1.0, because we have pivoted over time to where we currently are today. So we've always been an AI company in real estate. And if you even look at our NASDAQ ticker, it's AIRE or AIR, right? AI for real estate. That's why we chose it. And at that time, right, we were obviously AI in real estate, but we were focused on short-term rentals. And at the time, what we had done was we had developed, basically proprietary AI technology to help us identify the most viable short-term rentals that were out there that were generating the most yield. Let's say the highest yield.
And so
And
this is Airbnbs or VRBOs, and you
yeah,
guys are building software for folks that are managing those.
no, we were building software for us to identify the most viable ones out there, and we would acquire them.
Oh, wow.
We were an asset-heavy AI company, which was kind of interesting. So we would acquire those properties. We would get them running up on Airbnb and get them generating, revenues. And then we then created a marketplace where everyday investors could come in and be fractional owners of the Airbnbs that we bought. So they could come into the marketplace and they could check out, how the home was performing and say, I want to be 25% owner of that home. So if you think about another player that came in with like the fractionalized ownership was like Picasso. Picasso was doing it with vacation rentals where people just owned the rental, but more for themselves. What we were doing differently was these are actually revenue generating assets that were right. So people could come in and be 25% of that, but then they can get 25% of the net income that generated in addition to the 25% of the equity appreciation over time.
And the idea is that you guys will get better, your engine will get better at identifying and allocating the different investments towards the properties that most interest these end users or investors.
Absolutely. And in addition to that, because we were technically the manager of the property, we were getting 20% of the revenue off the top as well. So it was a great model. And then, things started to change on us. We didn't have a lot of capital. So fortunately, we were able to use a lot of leverage with the banks. So we had deals where we could do 10% down payment, leverage 90% of it at 3% interest rates. Right. So, things were going really well. And then as the macroeconomics, started to change out there, interest rates started to go up. Then you had to put larger down payments because you couldn't leverage as much. And then we had short-term rentals in Florida. There were a lot of hurricanes that were going on in Florida at the time. So your insurance costs went up, or they wouldn't even cover certain types of claims anymore. And you didn't have to be the CFO of the company to realize that, hey, this isn't sustainable for us. We don't have a lot of capital. Home prices have never gone down. They continued to rise. So you had record high home prices, interest rates that went from 3% to 7%. Insurance, I think, tripled. And so we figured out, hey, this isn't a sustainable model. We need to figure out, how do we adapt?
I'm hearing that you're very beholden to the macro situation. And when that macro environment flipped, that's challenging just from a pure math standpoint for you guys. So you're realizing this, and it sounds like you're thinking about, okay, what can we do that doesn't make us as reliant on this macro environment?
You got it. That's exactly what we did. We kind of saw the headwinds, and we said this is going to be a bumpy ride, and we didn't know how long the ride was going to go. We were still a startup at the time, and we didn't have unlimited funds. And we said, hey, look, it's an adapt or die. This kind of mentality is what we had. Could we have made it? Yeah, who knows, right? But that was kind of the mentality, is we need to find another way. And what we decided to do was go from more of this asset heavy to an asset light. And we continued to, invest in our AI technologies, and we started selling some of the assets, that we had to help pay for our AI that we continued to build over and over and try to enhance it into what it is today. As we were going through that, there was something that had happened. I'm not sure how familiar you are, but this was a residential real estate class action lawsuit that happened. This would have been, I think, in early 2024. Class action lawsuit.
This is about agent commissions and buyer versus seller, who's paying and what's required. I was familiar with that.
So, we happened to be in a executive committee meeting at that time, and we were having a workshop when that came out, and we started talking about it. And we're like, hey, look, if we look under the hood at all of our technology that we built, we really think that we could build a home buying platform that we could put out there for these home buyers and basically do it at a low or no commission. And we could live by leveraging our AI. So we decided to start going down that path. And that was a new bet that we decided to take as reAlpha. And now we're reAlpha 2.0, which is basically that version right now.
And were all the eggs in that basket? Was it, hey, we're going down this new direction and we're shifting gears fully? Did you guys have any other plays at that point? Or was it, hey, this is the future of the company?
We were considering some other things, but we felt pretty good about this. We weren't sure, what these types of changes were going to be and how long it would maybe take for these changes to take effect. And quite honestly, some of the bets that we took haven't really taken place. So, like for example, after this class action lawsuit settlement happened, the buyer and the seller each get into their own realtor agreements, right? Separate realtor agreements. And there's commissions that are essentially can be negotiated. So our first bet is the buyer is going to be on the hook for having to pay a commission now. Whereas historically they never had to, because the seller always typically paid the 6%. And then that 6% would be divided up, 3% buyer, 3% seller. Then that created the class action lawsuit. So we said, well, that's going to go away. So now if I'm a buyer and I'm going to pay 3% on top of the price to buy a home, that's going to put them in a tough spot. So we said, we're going to be on the buyer side. Mm-hmm. What's really happened though, is that sellers are still, I would say, concerned that if they don't offer a buy side commission, that no buy side agents are going to bring buyers, to their home. So there's a paranoia there, right? That exists as a home seller, that if I don't offer a commission, nobody's going to come see my house. So that still exists. There's more transparency about it now, but there's still seller commissions that are out there for the buyers.
Yeah, that both sides of the marketplace, even though there's this lawsuit, it doesn't shift as dramatically, because there's still a culture of concern around whether or not the buyers will be bringing those potential interested parties buy the house or apartment. Where were you guys at? Were you in the IPO process when this happened, or were you thinking about it? Was it still off on the horizon?
Yeah, we were going through the process when all of this started to unfold. And so it was very, very interesting, definitely. And, the one thing about the IPO process is, once you start it, you're in a quiet period as well, that you're going through. One thing that I think is really important to talk about from a timing standpoint, and I think will probably have some relevance to the retail community here, is, we didn't take a traditional path to IPO also. As a matter of fact, it wasn't an IPO. It was a direct listing to NASDAQ. And the reason why we were able to do that was the way we raised capital at reAlpha was very unconventional. If you think of private companies, a lot of them go through VCs, right? And as a result of going through VCs, they'll get capital, but they usually get diluted pretty well also. So one of the things that we wanted to try was a Regulation A, or it was a regulation crowdfunding or Regulation A, where we can go ahead and try to raise money through, they call them a mini IPO. And we decided to do that. So our first source of capital, we had a seed round that we had gotten, but then we went straight into a Reg A, and we ended up raising funds. I think it was about $9 million or maybe $9.5 million from over 3,000 retail shareholders through our Regulation A.
Wow.
Yeah. So we got retail shareholders like right out of the gate. And, but one thing that these retail shareholders needed was a path to liquidity, right? So Regulation A, you're not on NASDAQ at that point in time. So it's not like they could just freely trade. They have equity in your company, but they need a path to liquidity.
They'd be the same as a VC who often these time horizons are 5, 10 years, but you guys accelerated that, it sounds like, and went through the DPO, and that provided some liquidity to the initial retail investors that came in to support you guys in your earliest stage.
Absolutely. So, yeah, so the day that we went public, we had over 3,000 investors on our cap table, right? That we had to convert over, that are now, obviously freely trading, but, that's how reAlpha got started, through a Regulation A.
How was that process for you as a CFO? You're new to the CFO role. You're going through some kind of next gen type fundraising using these new crowdfunding devices. I don't know which platform you used. I'm sure they helped out quite a bit. But what was that process like? And then going through a DPO, which another kind of unconventional event. How did you approach that as a CFO? I'm sure you were drinking from a fire hose.
Yeah, I was drinking from a fire hose, but the one thing that we, I guess, always, held our, I guess, I'm trying to think of the right word to say here. We always felt confident we were going to get through it. You partner yourselves, with the right people who have been through the process before. They kind of help you through it. Geary had been through it before, and you know, a lot of times it's who you know and who could help you get there. And we had some pretty bright people in the company. We were able to figure it out along the way.
How did the company change from private to public? What was the biggest change for you? Uh, was it internal? Was it external? How did it feel from that first day of going public?
The Regulation A was kind of like a step in that direction already. You started, doing the Regulation A started to give you public company type obligations, but instead of like quarterly filings, there are semi-annual filings. The level of disclosures were kind of still the same. So, by the time we ended up doing a direct listing to NASDAQ and became a public company, we already had, it was almost like, doing some practices or preview games, before you get to the regular season type thing.
So you had some
And
reps.
we had some reps already. And if the transition, I think if we went straight from private to IPO, it would have felt like probably a little bit more of a drastic, change. But because we did the Reg A, it kind of eased us into it.
And you guys go public, you're on the markets, you're traded on NASDAQ. You go public during a kind of wild time to be a public company. So how were those first few years on the market? Obviously, from a macro perspective, it was challenging for a lot of companies. How did that feel inside reAlpha? How did you guys navigate that?
It was challenging because I'd mentioned the pivot that we're going through. So, here's a company that started winding down, revenues in the asset heavy model, right? So we could start winding up revenues in the asset light model and, kind of do the pivot. So, having to do that as a public company was a bit challenging. So, now we're fully 2.0. We don't have any of the old business, kind of dragging us anymore. And, we're ready to roll. So we feel pretty good about what's in front of us now.
I love it. So let's fast forward, new to the CEO role. That's very exciting. What's a day in the life like for a public company CEO? A lot of the folks I talk to, it's almost like they have two jobs. They have to run the company and they have to navigate the public markets. What's the day in the life look like for you?
It certainly is two jobs, but they're very much related. So as I would say, as the CEO of reAlpha, focused on our strategy, it's making sure when I come in that our strategy is being executed. We have kind of that first line, reporting to me are the folks that I rely on, and always making sure that things are on track and we're holding people accountable. And we are, if there's any blockers or things that I need to do, that I'm doing what I can, in order to enable them to be the best that they can be. So I rely a lot on that first line, to, kind of go ahead and execute on the strategy. But in the same token, I'm spending, more and more time talking to investors now. particularly it was been a lot of institutional at first. But now, recently got an X account. I'm starting to get, a little bit more active on that. And, I'm a guy who, I adapt, and I realize that this is something that I also need to do. Right. And, even though I'm a, 50-year-old guy, I still need to learn to change and get with the times, and make sure that, I need to be present out there in the retail community as well.
What does an X account mean to reAlpha? How do you think about communicating with retail investors in that platform, in that environment? What are some indicators of success or positive, healthy engagement with that community?
I'm still learning, as I go here. But I could tell you that if I'm just going to kind of stay true to what I believe in. And what I am is I'm the guy who doesn't like to say a lot of things on X until I feel very confident about it. I'm not a guy who just kind of speculative or just kind of throws some zingers out there, to kind of get retail investors fired up. I'm a guy who's very thoughtful, and, tend before I post something, I tend to put a lot of thought behind it, and I want to make sure that it's meaningful. So, you know, I may not do multiple posts a day, maybe a few times a week, but I'm putting a lot of thought behind it. And the other thing that I've learned is that I've seen people out there, basically announce that they're going to do something, and that could get people fired up, and that's great and all. But my style is more announcing that we did something, right? And we've done it. And to let them know that it's more substance. And I hope that I'm kind of, like I said, I'm kind of new to the scene, but I'm hoping that the retail investors will start to see that as a trend, that, when I post something, it's something that's truly meaningful. And hopefully I'm trying to convert reAlpha from attracting, I'll call them traders, to more investors, like people who believe in the story. They want to get in on the long game, however long that game is. But I'm trying to be a little bit more attractive to those types of folks.
Yeah, it's a great call out. And from our seat, we look at retail investor strategies all day, every day. And what a lot of people forget is there's 130 million retail investors in the US. It's a wide spectrum. There's all different shapes and sizes. And I think finding the true believers is what we hear from a lot of CEOs, is looking at, in the same vein as you look for long onlys on the institutional side, you kind of want to find those long only retail investors. They believe in you, believe in the team, believe in the business, and they want to be along for the ride. Have you had any feedback or interactions on X yet? Any things you want to share on that front?
I'm getting a lot of advice, from people, to I don't know, to do this or do that, or buy this or buy that, or get bought by somebody. I read them, I take them, everything I get, I take into consideration, right? There could be one great idea, that's out there. But the one thing that I'm learning to do is, taking feedback, but also keeping our vision, whole, and having that North Star. And, if there's ideas that could help us get to that North Star faster, by all means. But we have a vision now, and we're executing on that. And we feel pretty good about where we'll be if we can get there, or when we get there.
Yeah, I like that. And the direct communication aspect, kind of building on the Twitter point, we were going through Twitter and YouTube and Reddit and stock twits. A lot of the posts, they're either investors that are calling out their enthusiasm, they're resharing a lot of your news and advocating. But we also saw you guys get mentioned when folks were talking about Open Door or other related companies. Do you want to talk a little bit about how you guys think about other players in the space, and then also in the minds of retail investors when they're looking at the category or the thesis around AI and real estate, what that means relative to the other comps and players in the space?
It's such a large space, such a large asset class, and there's so many variations of it out there. We consider ourselves somewhat unique because we're fully integrated vertical platform, right? That's powered by AI. But there's other players out there, even if you look at the big players out there, Rocket, making that move with Redfin and Mr. Cooper, there's those consolidation plays that are starting to take effect. And it's really tough, I think, if you're a retail investor trying to compare apples to apples out there, because I don't know if there's a lot of apples to compare to other apples. I think that there's a lot of, there's apples and fruit and oranges and bananas out there, but you gotta go ahead and kind of pick what you feel is best for you. And what I say is our differentiating factor is there's these integrated players in place out there, like the one that I just mentioned. But I feel reAlpha is more purpose built, versus patchwork. And what I mean by that is, hey, we're a small company. We're kind of building things from the ground up here with this very specific purpose, right? To help the home buyer in realty and mortgage and title, and give them a rebate back. And that's what we're building this to be. And instead of kind of merging these, mega powerhouses together, which they're really good for a reason, right? They're good at what they do. But I've also been a part of big companies also, right? BMW is no tiny company. And I can tell you that big companies have their big cultures, and you have a lot of people and processes and technologies, and merging those together that's not an easy thing to do either. So, being purpose built, a small company, we have the vision, we have the resources to get us there. I feel that we have an opportunity to start capturing, a lot of the market, once we really get this flywheel going.
I like that. And I think that leads into kind of the next question is how do you think about investors finding reAlpha? Like, how are they discovering you guys? And then how are they understanding the story? Are they finding you through posts on these platforms, through articles, through their brokerage apps? Like, what does that journey look like for the investors that you guys want to believe in the story that you're putting out to market in the company you're building?
I think, in particular to the retail community, they may be finding us, maybe on these platforms, but they could be also finding us from commercials in the markets in which we operate. And if you're looking at a particular product, you might be interested in looking at the company who's selling the product. And hey, you see that they're a public company, and you look into them, and maybe you want to buy some stock in them. So it's probably a combination of, starting to have a little bit of a presence on these retail investor forums or sites, as well as those markets in which we're actually operating and doing commercials. Maybe some customers are looking to invest as well.
Yeah, a customer has a good experience. They realize you're a publicly traded company, that they like their experience as a company, and it's a little bit of that Warren Buffett invest in what you know mentality. Uh, with that, I guess maybe shifting gears a little bit, but I'm always curious, where do you track your stock? Do you have the Apple stock widget? Do you have Robinhood? Do you have an email that's coming in with a lot more dense information? But I asked most of the CEOs, like, how do you actually track your stock? And I will say most of them say, we don't. We tell everyone not to, but I look at it in the morning and at night. But curious on your end, how do you track your own stock?
My own. Are you talking the stock that I buy, or the reAlpha that I have?
reAlpha.
reAlpha.
Just like reAlpha, like where's the price
we,
that data?
I mean, actually, I'm kind of old school. I have I have a NASDAQ app that I look at, and it's just basically bookmark that reAlpha. I'll look at a little pre-market to see if there's some good pre-market activity going on. And some days you wake up and you look at it and you're like, wow, this is going to be a wild day. When you see some of the crazy volumes, at 6:30 a.m. type thing. Peek at it maybe at lunch, and then again at the end of the day. The one thing that I really quickly learned is it could consume you. And if you let it consume you, then you're hurting yourself, you're hurting the company, you're hurting the shareholders that are betting on you, because you're so fixated on your share price and not on the vision, right? So like I said, this is a long game here, and it's about coming in and executing, and the things will take care of themselves, right? If you execute the plan. That's the way I look at it.
Maybe looking at your own personal, staying abreast of macro trends. You're on X now. Do you subscribe to any newsletters that are financially oriented? Or are you more of a Wall Street Journal or CNBC guy? Are you on Substacks? Like where's your information coming in as far as staying on top of macro trends?
I invest in some newsletters like National Mortgage News. I read like Wall Street Journal. I just go out a lot just on Google a lot as well. And I look and see what's going on in the news. I'm just more of an aggregator of information. And I really don't have one particular source of news. I like going to a number of different sources and kind of piece together, what I feel the narrative, is. Because sometimes the narratives are so slanted nowadays. If you go to one source, you may not be getting the right one anyway. So I tend to kind of aggregate it myself and build my own narrative.
It sounds like curating your information diet a little bit to have a little bit of everything. And then on the personal side, what's kind of your investment style? Do you use a brokerage app like Robinhood, or are you more of a just buy and hold index and ETFs and bet on the market? Do you have a personal investment style?
Yeah, I mean, I'm definitely into the ETFs. I do have a Robinhood app as well. I have a financial advisor as well. So again, I kind of have a variety of different things that I do, and the financial advisor is good as well. He kind of keeps an eye on things for me. Every once in a while he'll call me and tell me, hey, we got to make a change here and there. So he's a good guy and trusted. But yeah, again, I just try to I don't know. I just try to be as efficient as I can with the tools that I have in front of me, and it's a combination of things. You're probably finding out, about me, right? I do combinations of things and I put something together that works well for me. That's usually how it works.
That makes a lot of sense. And maybe going back to the retail investor mindset, uh, how's your team thinking about communicating? So you have this X account now. Uh, how do you guys think about coming into an earnings call, maybe ensuring that the information is getting out there to the right investors, that you're communicating the right story? Like, what does that process look like internally? Has it changed meaningfully over the last year, just as markets have changed? How do you guys think about communicating to the markets?
I mean, not even just in the last year, I would say in the last months, we're talking a lot more about the retail community. Um, we've always been saying that, hey, reAlpha has to cater to the institutional investors, and everything that we've done has been around the institutional investors. And then, you take a look at our cap table and you see that there are a lot of retail investors that are interested in our company, and we need to kind of adapt the way we communicate. So, the way that we've done earnings calls in the past, we should change that. And, I think what people are going to start seeing is kind of a different version of reAlpha that's going to be a little bit more retail oriented on channels that, the retail investors will want us to communicate with them on.
Do you see that as also potentially driving top line? We've seen a lot of companies drive awareness from their investors as potential customers as well. Do you see retail investors, they're buying homes, looking at reAlpha, and if they're investing in the stock, maybe saying, hey, I'll take a crack at this platform and support the company that I'm invested in?
Absolutely. 100%. If we can have, the retail community become super fans, they'll ultimately start, buying our products as well. Right. And telling their friends and family about it. And that's really where you start to get that flywheel effect I was mentioning earlier.
Yeah, it's interesting. You're seeing examples like Open Door again. You've got the Open Army, and they're very mobilized and they're supporting the company. And there's a lot of direct communication. We've got a few questions to wrap things up. Kind of looking externally, what are companies that you might model yourself after, or executives, or other brands that you take cues from? You obviously worked at BMW for a long time, so I'm sure you bring a lot from there, but maybe other companies that you draw some inspiration from.
Well, it was interesting, coming from automotive. You're right. I do have kind of an affinity, towards automotive. And one of the companies I looked at when, we started building our current platform was Carvana. And, if you think about what Carvana did, right, it took the used car sales that were primarily done through these used car dealers, and they took the process online. Um, they consolidated the process as well, right? You could view a car, you could do financing through a car, title. And so, car buying and home buying, there's a lot of similar steps there. So I did a lot of research and studying and even talking to some folks who work there to try to help us figure out, how do we build this reAlpha solution. So that's certainly one of them. And always are keeping an eye on the folks who are always disruptors out there or pioneers in the space, like what Tesla was doing. Obviously, catches your eye, and when you see what Nvidia is doing, I mean, the Magnificent Sevens, they're always doing some pretty incredible things.
I think all the companies you mentioned as well, Carvana, Tesla, Nvidia, also hugely supported by retail investors. And retail has had a seat at those tables and been able to invest. Maybe wrapping up, looking out 5 years from now, what are some non-financial KPIs that would really tell you that reAlpha has been successful and that you've accomplished the mission?
I mean, customer satisfaction, I think, would be a huge, non-financial KPI. Maybe even customer referrals, I think would be even better, to be quite honest with you, because if you're satisfied, but then, you end up referring, to your friends and family and they start coming on board, that is a great indicator.
Really seeing that flywheel take and people enjoying the product, recommending it, word of mouth, often the most powerful marketing lever you can pull. So Mike, we're at the end of things. Where can people find you online? What's the best resource to point them to if they're interested from an investor standpoint in learning more about reAlpha?
Sure. From obviously the retail investor community on X, Mike_Logozzo is where you could find me. I'm on LinkedIn, but I'm not sure how much of the retail community is going on there. But I also am fairly active there as well. I try to be kind of equally active on both of those platforms.
Great. Well, Mike, really appreciate the time today. Love learning more about reAlpha, your journey, and where you guys are at today. Any last things you'd want to share before we leave?
Again, I've been in the role it'll be going on 4 months next week. So, bear with me a little bit, but I really think we're on to something special here, and really excited about, the vision that we have, the team that we have in place, and kind of the plan that we're currently executing on. So, if you're in for the long game, reAlpha could be a good one for you.
Love it. Well, thanks again, Mike, for the time, and hopefully we'll have you back soon.
All right. Thanks a lot.
Thanks for tuning in to Marketopolis, powered by Stakeholder Labs. If you enjoyed this episode, make sure you're subscribed so you don't miss upcoming conversations with leaders shaping modern investor relations.